Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. This is your S&P Oil, Euro, and earnings play for May 31st, 2012. Last day of the month was a very, very interesting one. We had another huge range. Yesterday we had a 12-point range. Today's range, I think, was around 16 points. So if we look at the market profile for tomorrow, we always want to know where our point of control, where our value area high, and our value area low is. Where did buyers come into the market? The S&P can be looked at as not as a stock market, just as a supply-demand curve. When do buyers come in? When do sellers sell? And where is it most of the action traded? So our point of control for tomorrow is going to be 1309. This is where the most volume traded. The value area high is 1302. This is where sellers came into the market. The S&P sellers came in at higher, but a big, vast majority of them came in at 1312. Buyers came in the market at 1302. This is probably the third time I've seen 1300 tested to the downside. Break under 1300, we rip above 1300, and once we get through this 1300 to the upside, we break up and break up strong. So this is your market profile for tomorrow. Let's start by looking at the daily chart. Today was a doji inside day. We did have a huge range, but we basically closed right where we opened, unchanged on the day. So in the daily chart, I talked about this yesterday and I flagged it. We could be in a trading range. We could be in a 1285 to a 1340 trading range. This could extend for a very long period of time. We saw this, basically from February to May, this trading range of about 80 points. So we might be starting over and having a trading range. Right now, this trading range is about 55 points. But we've been in it for basically since the middle of May. Currently, the month of May, we are down 6%. June historically is a strong month for election years. On average, over the last 7 election years, June is up 1.7%. So that's very important to know. Let's look at the 5-minute chart. For the S&P, we opened up this morning at 1311.25. Selling pressure all into the morning. The euro was looking weak all day. Got the low of the day at 10.05. 80% of the time we have the high or low within the first hour. Today was not one of those days. So 5 trading days a week, 4 days we have it, 1 day we don't. So I think a lot of people got trapped. They probably had, if they shorted anywhere in here, they had stops above the high of the day, and it really ripped the face off the bears right there. Sold off in the morning, got down to 1297.25, so this will be a critical level tomorrow. We had a technical buy on the 5-minute on the close of this bar at 1309.75. I would have had a risk about 5 points, and I would have got 10 to the upside. I did not take this trade. Overlapping bars, breaking into the cloud, and then we really ripped higher, but I did not take that trade. Let's look at oil really quickly, and I'll start with the daily. Another weekday in oil. This is continuing weakness. I think the final flag, or where we can go, is the $75 level, $76 level. Oil continues to look weak, just like the euro. Lower lows, lower highs. Euro and oil continues its weakness. If I bring it up on a 5-minute chart, I trade oil to intraday on a 5-minute chart. Sold off this morning. We had a breakout here. This had a technical buy here. This would have been a stop. I did not take this trade because I'm a seller in oil. I'm not a buyer in oil. So I didn't want to buy anything in oil. I'm only looking to sell below the cloud. So I did not take this trade. Let's bring up the euro. And for anybody that knows how I trade the euro, I trade it on a 240-minute bar, which is also equates to a 4-hour bar. And I look at it the 24-hour. Europe is open when we are not. So an inside day, a doji day. We did make, lower lows the other day, yesterday actually, 23.37. I think we can test back to the June 2010 lows, which I'd have to bring up here. So we took out that 126. I'm a seller on any rally. And I'm going to have to bring up a weekly. I'm a seller in any rally in the euro. Gets up to 124 and change, 124.90. I'm a seller. Gets up to 126.5. I'm a seller. I think we can test down this 120 level, which is, the June 2010 lows. 2 earning trades that I want to talk about. One is OVTI, and this one looks to be a profitable trade. I had 3 earnings trades for today. They're all 3 winners. I had a JOY, Joy Global, was a winner. I also had a TiVo, which is a short position. I had a winner. And Lionsgate was a bullish position, and that was a winner as well. So in OVTI, I looked at the daily chart. It did break this channel to the upside, and I had this drawn in before. So just give me a second here. And I just duplicate this bar, ship it over here. So it did break out here, however it is in a bearish tone. I thought it was a good opportunity to get short it. I thought I could retest this $14 level. The June at the money straddle was $2.40. So did I think there was a better chance the stock would go up to 18.5 or back down to 14? I thought 14. So I did a very simple strategy. I did a put fly. I bought the June 16 puts and the June 14 puts, and June 12 puts, and I sold twice as many of the 14s. I did this for 40 cents. My break even is $15.60 to $12.40. So in this range, anywhere in this range, I will make money with my nectar spot being at 14. Once again, I bought the June 16 puts and the 12 puts. I sold twice as many of the 14 puts. This is known as a put fly. The most it can be worth is the difference in the strikes, $2 put fly. So it could be worth $2. I make the most money at 14. It could be worth $2. I paid 40 cents. So this was giving me a 5-to-1 payout at maximum value. As we look at the 5-minute chart, as you can tell, I'm short at 15.60. The stock's right now at 15.43. So this will be a profitable trade. In theory, I want the stock to go lower. The lower it is, the better for me, towards 14. If it gets down to this $12 level, then the higher the better. So I currently want it to go lower, and this should be a good trade for me for tomorrow. One more earnings play I had on. I didn't even know, see if they reported. ASNA. I sold the 18.5 18 put spread. I did this for 15 cents. It's a 50-cent put spread, and basically I'm willing to get long this stock. I didn't think it'd break 18.50. If it does break 18.50, it's got a long way lower. So my break even is the put spread 18.50. I sold the 18.50s and I bought the 18s. I did this for 15 cents. I collected 15 cents, so I just take 18.50 minus the 15 cents that I collected, and my break even's 18.35. If it's under 18.35, I will start losing money. I am capped my losses at 18. I'm risking $35 per one lot to make $15. But I think as long as the stock stays flat, goes up, or doesn't sell off more than 3%, I will win on this trade. So I think this represented a great risk versus reward. This is Andrew Keene from KeeneOnTheMarket.com. Tomorrow is June 1st and the end of the week, so I'll go over the weekly charts in oil, S&P, and Euro. In our live trading room, all trades are real time, real money, and announced live. If you guys want more information, you can email sales@KeeneOnTheMarket.com. Since we had a webinar this week, we do have running a promotion this week and this week only. You have to email sales@KeeneOnTheMarket.com. Have a great night.